Hey, it is Brian Shannon from AlphaTrends.net. Today's Friday, the 30th of September, and we just finished an awful month, week, quarter, and still 3 months left in the year. We're down 24% in the S&P 500. The NASDAQ down 32%. Semis have led the way there, down close to 40% year to date, and the Bitcoin is down 55%. So it's just a bloodbath across the board. Biotechs did stand out a little bit this week. We had news there from Biogen about an Alzheimer drug, and that's what was the reason for that. The group is still broken, as we'll see, but let's take a look at the action here. There was no turnaround with a break below that prior low. As I pointed out, we often see a slight undercut of the prior low, and that serves to bring in, generally uneducated short sellers and, hit stops from people who have been using the low of the year for a place to get out. And, we typically see a turnaround there. Typically doesn't mean always. We still have a declining 5-day moving average. Yesterday, I tried to get a quick day trade in, as I mentioned on the Twitter, and that was a mistake because I don't run a day trading service. I run a swing trade service, and it tends to confuse people when I talk about a day trade, especially when we have the declining 5-day moving average. And I'm so adamant about not buying with a declining 5-day moving average. So I feel like I need to explain that a little bit to say that, if I'm going to trade a swing trade, for instance, on the long side, we might have a declining 50-day moving average or a declining 200-day moving average, but it doesn't mean I'm not going to participate in rallies like this. I thought yesterday we had the possibility of a turnaround, and it did rally a little bit yesterday afternoon, but the point was we still have a declining 5-day moving average. I made it clear it was only going to be a day trade. So sorry if I confused anyone on that, because again, the primary trend for my time frame is still lower. My time frame is a swing trade, and it's been lower since that gap that occurred after the CPI report. And again, that the CPI report, people try to overthink things and over intellectualize the market, and they say, well, the Federal Reserve's favorite indication of inflation is the PCE, and we just don't get the same reactions off the PCE as the CPI. So, do we care what's most important to the Fed, or do we care what's most important to the market? I'm not an academic. I'm a trader. I'm trying to make money from market actions, not to try to figure out what Jerome Powell ate for breakfast. That doesn't matter to me one bit. What matters is price action, and it's still a pattern of lower lows and lower highs with a declining 5-day moving average. It's, I fall into the habit or the thought sometimes, as other people do, to think, how much lower can this thing go? Is it down too much? And the fact is, it's not down too much if there's still sellers. And, to try for a little bit of a bounce trade here and there is different than trying to pick a bottom. I am never trying to pick the bottom. If I get involved at the bottom, it's completely by accident. It's because I've timed a short-term bounce, and for some reason the market has allowed me to hold longer. But it's never my goal to say, that's it. I'm calling the bottom. I'm getting involved. I'm putting all my money in for my retirement account. I'm a trader. That doesn't. It just isn't part of my mentality. So, in a ways, again, we're still in a primary downtrend. Let's take a look at that 200-week moving average. That's right here. That's that blue line. The blue line is the 200-week simple moving average, and there was no support there. And again, it's only a level of interest. All of these technical things that we look at, volume-weighted average price levels, Fibonacci levels, moving averages, you name it. They are just levels of interest. They are not signals to buy. They are a reason to look at shorter term time frames and see, are the buyers gaining control? And again, very quick look. Declining 5-day moving average? No, the buyers are not gaining control. It's still in a downtrend. Our next level of interest that has the potential to find buyers is the volume weighted average price off that 2018 low. We've been talking about that one for a while as well. Looks like we are destined to hit that one next week, maybe at about 353 and a half or so. And it, some people say, well, is it 353 and a half or is it 354.10? I don't care. That's not the point. I'm not sticking a bid in at that level. It's an area of interest that says look to the shorter term time frames and see if the buyers are gaining control. And if we're still below the daily volume weighted average price, the 2-day volume weighted average price, the declining 5-day moving average, etc., there's just no reason to buy. Let's take a look at the NASDAQ now. The NASDAQ, same story. No support at that 200-week moving average. We, previously have tested it and bounced from that general area, but just because it worked before doesn't mean it's going to work again. It's a level of interest to look at the shorter term time frame and say, are the buyers in fact gaining control? And we look at the weekly time frame. We undercut that low, and we closed right at the low for the day, the week, the month, the year. In this market, we're not seeing the bigger volume the way we want to see. And then in the S&P 500, what we want to see is expanding volume in the direction of the trend, and then the biggest volume tends to occur at the turning points. The problem is you can look at this and say, well, that's the biggest volume. Is that the bottom? No, because Monday we might have a volume bar that looks like this. Tuesday we might have a volume bar that looks like that. They are simply reasons to look at the market and look for evidence that it's getting oversold, things are being thrown away, we're getting margins calls and that sort of thing, but there's no reason to be a buyer. If you're trying to day trade, it bounces, that's a completely different story. And you just got to move to the sideline as soon as the market tells you you're wrong. In that trade in the S&P that I mentioned, I think I lost 38 cents, and you should have seen the people on Twitter calling me out on it like it was such a bad thing. The Russell 2000 also still in a primary downtrend. This is the only of the major markets that we look at that hasn't undercut that June low. It seems inevitable that it will. It also seems inevitable that it's going to hit the volume weighted average price anchored to the 2016 low. That would bring this market down a little bit further down towards that. Let's see what this level is. Looks like at about let's just call it 162. Again, it's in that general area. Whether it's 162, whether it's 162.80, I'm not concerned. I don't think like that. It's not a place to say, well, it's 162.85, therefore I'm going to stick a bid in at that level. That is absolutely foolish in my mind. That's just expecting something to blindly become support. Now, in the Russell 2000, we're seeing a little bit more neutral action, but neutral in a downtrend is, possibly just a time correction before the next leg lower. It's not something to be bullish about. If we break back down, then we'll continue lower. If we move back above, the high from this week and that 5-day moving average you can see is starting to flatten out, then, maybe we start to make higher highs and higher lows. But it's not, if we start to turn higher, I don't think it's going to be easy for this market to make big headway because we have all these prior levels of support which have the potential to become resistance. And then we'll also keep an eye on the volume weighted average price from the Fed, which was right there, from the CPI, which is right here, from this high right over here, and from the high that it made a month and a half ago. So it's not going to be easy for a bounce to materialize. This market, there's no saying that it has to turn around at any particular time. As we've mentioned over and over and over again throughout the year, if they don't scare you out, they will likely wear you out. The more likely way that this market will make a bottom, let's say we've made the low for the year. You don't have to buy there to make money. Let's say this is the low and we start to see something like this. Well, if we see another rally, it's most likely just another rally in a downtrend. Treat it as such. If we start to see action like this, well then 6 to 9 months down the road when that 40-week moving average is flattened out, then perhaps we can begin a new bull market. But until then, if they don't scare you out, during the price declines, they will likely wear you out as it turns sideways back and forth. We're not going to see a V bottom. It's simply not possible. Anything's possible. I shouldn't say that. It's not likely when we have the Federal Reserve still in a monetary policy of tightening. Semiconductors, as mentioned, down close to 40% year to date. These guys have been the leader for the upside for years, and now they're leading on the downside. They're right on the low, the volume weighted average price that is anchored to the low from 2018. That is a level of interest. I'm not going to buy there just because we're at a level of interest, because when I look at the daily time frame, I see a market that is below the declining 20, 50, 100, 150, 100, 200-day moving average, etc. It means the big money is flowing out of the market. The biggest money on the planet are net sellers. That's why those moving averages are trending lower. And why would I want to fight those bigger institutions who control billions and tens and hundreds of billions of dollars, and in the case of BlackRock and them, trillions of dollars in the market. They're the ones who create the trends. I don't want to fight what they're doing. That's absolutely foolish. So 15-minute time frame, we got right up to the prior support that was broken on Thursday. We broke this support. Friday, we tested it right at that declining 5-day moving average as well. And the sellers came back in and they were active all day. I think we're, likely going to see some kind of capitulative event that might mark a near-term bottom, maybe next week, maybe the week after. I don't know, for a tradable bounce. And that's why I was trying to, buy some on Thursday. But the fact is, we just don't have any evidence of that yet. Looking to this, the volume isn't really as significant on an index ETF, I'm sorry, a sector ETF as it is the index, but just look at price. Only price pays. If you're a buyer, you're losing money. This has the potential. Maybe we're going to see that next week we look at this and go, wow, wasn't that volume weighted average price amazing? It marked the absolute low, and then we see this big rally. Just because it might end up being the perfect spot that it bounces from doesn't mean it's easy to buy there or that it's low risk. It is high risk to buy anything in a downtrend. If it gets back above this level next week, it'll start to become more neutral. Maybe the fresher shorts will start to cover. It'll do something like this, and perhaps we could see a rally. I'm open-minded to anything happening. This is why I make these updates every single day for subscribers to Alpha Trends, that things change quickly in this environment. The biotechs, as mentioned, biotech had a huge rally. Let's take a look at that again, and that's a big component in the biotechs. That's why the biotech sector was up this week. But is it, did it do anything to change what the trend is here? Again, I don't look for these, but if you've got a shoulder, a head, and a shoulder, you're gonna see the neckline breaks, and then when it breaks down, and then we see a test of that, if that still that prior support acts as resistance, well, then it's most likely that this is going to happen. It's possible that this could happen, but I'm not really, and I'm interested in possibilities, but I'm more interested in what's likely. Where do the odds lie? A trend once established is more likely to continue than reverse. This trend has been established all year. I think it's more likely to go down and test the lows. There's no reason to think otherwise. Financial stocks, I don't like talking about them, so I'm not going to. They're in the same boat as everything else, though. And the energy stocks are down to the volume weighted average price from the mid 2021 low. That has been a significant level. That's why we've spoken about it. As far as buyers have shown up there at this point. So anchored from this point, they've shown up here. Again, does it mean they're going to show up here? I'm not going to bet that. It's a level of interest. If it breaks that, if instead, let's say we get a bounce and it does something like this, I think it's more likely that it's going to come down to this one. And that's the way markets move. And then we'll get a bounce in there most likely. But let's not get ahead of ourselves on that weekly time frame. Let's go back to the daily time frame and see here. This is what looks to me very much like, increased volume on the way down, lighter volume as it rallies. This is, classic bear flag type action. It's below a declining 20, 50, 100, 200 day. Well, the 200 is still advancing, but it's still a broken mess of a market. Now, this is what I'd outlined for subscribers Thursday night, that we were going to start to see the 5-day moving average rally, because today we got rid of this data in the 5-day moving average calculation. Monday we get rid of this data, so it will continue to rise, the 5-day moving average, as long as we're above the levels that we were last Monday at this point. So just because it's above a 5-day moving average doesn't mean I love it. It means that, if we pull back and then do, have a little shakeout, maybe it's good for a trade up to that VWAP from the CPI, but then look at the daily time frame. Is there anything bullish here? No, this is yesterday's news. This is a prior band of support that is likely to become resistance. So just because the 5-day moving average might be turning neutral, if you do buy a move like this, it would mean you do so with very small size, because the bigger picture, the bigger time frame, the more powerful time frame is still bearish here. Anyways, looks like I'm at about 14 and a half minutes. So please like this on YouTube, share this with your friends, etc. Like, put comments out there if you like, and have a good weekend. Regroup for next week.